When looking for prices to buy or sell, we use support or resistance levels. Support levels are below the current price, and resistance levels are above the current price. There are many techniques for defining support resistance. There's trend lines, Fibonacci extensions, retracements. There's Bollinger Bands. There's lunar and time cycles, seasonals, Elliott wave counts. The list goes on. I prefer to use market profile or macro graphs to define my support or resistance levels, and I figure the best way to show you to prove that is simply by looking at charts and pointing them out. So here we have some daily profiles of the S&P, and what I like to point out here are the high volume prices, or that price that sticks out the furthest to the right in each bell curve, and you see how that can be support here, resistance here. Again, we had resistance for a whole day here. It was a low of the day over here and a high of the day here, and even a low was made right around the high volume price there. Of course, these don't work all the time, but they work enough to really pay attention to where your high volume prices are. Another area that tends to provide support or resistance are called sprints or single prints. They're very low volume areas, and when they're retested, you tend to see a lot of highs and lows made at those. For instance, right here you see a low volume zone made on a Thursday there. There's another one over here where we see a low on a Friday was made from a low volume zone from Thursday's trade. So sprints and high volume prices are very good for support and resistance. Here we're looking at S&Ps by weekly profiles, and let's just look at the high volume prices for the week. Here you can see that we made a low on a Tuesday off the previous week's high volume price. It may not hold for the whole week, but it'll hold for a while. Here we saw a high made on a Monday, and again here we saw another low made on a Tuesday, just buying or selling off the high volume price. Now of course it doesn't work every week, but here you can see 3 weeks in a row we have a high made off the previous week's high volume price, and again and again. So this is why I like to look at markets in a few different time frames to get support or resistance levels. Here we're looking at crude oil by month, and what I want to point out here that even the monthly profiles can give us support or resistance levels. Here you got the high volume price as resistance for a few months in a row, then down here you have it as a low for the month. Here you had it for the low for a week, and again for a month down here. So I think it's always good to be aware of what the fair prices are, because you can expect reversals when those things are first tested. Here we're looking at corn by month, and you can see here that a high for the month was made against the previous month's high volume price, and again over here. So I think again you really want to be aware of where these important levels are. And remember, I was talking about sprints or those low volume prices before. Here you see that it was a high for a month when that came back and retested that previous low volume zone. And just for further proof here, let's look at some quarterly charts here. We have the TLT, which is an interest rate ETF, and you can see that lows for entire quarters were made off of previous quarters high volume prices here for quite a while. And then again here you see it was a high for an entire quarter. And let's take a look at one more chart, which is the S&Ps by year, and you can see even the yearly profiles give us support or resistance at high and low volume prices. So remember, keep your eyes out for these low volume and high volume areas to find where tops and bottoms are likely to be made.